Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Meera Dugal.
I'm Harsha Subramaniam. The headlines at this hour. In an unprecedented press conference, 4 of the senior-most judges of the Supreme Court say administration of the apex court is not in order.
Nervousness spills over into the equity markets. Indices pair gains after opening at record levels.
TCS is the top Nifty loser after reporting weaker than expected growth in the BFSI segment in the third quarter.
Infosys will announce its third quarter earnings today. The country's second largest software service provider may report a drop in profit due to seasonality.
All right, unprecedented development today with 4 of the senior-most Supreme Court judges addressing a press conference. We'll get to details of what really has happened. But before that, a quick check on how the markets have reacted. Neeraj is here with what's been an extraordinary reaction in the markets as well.
Yeah, I mean, come to think of it, that it's expected to be almost no volatility kind of a day, and that is the kind of morning that we've had. A bit of a pullback from the levels, though I must say we were off the lows of the day as well right now.
Sure.
But yeah, from about the highs that we were about 0.5% off for the benchmark indices, the broader market breadth to coming off, and a small uptick, if you will, in volatility as well. But the reactions are par for the course. For the last 4 days, we've had Nifty IT outperforming in a big way, TCS not doing enough, and therefore TCS and Nifty IT itself have come off. Nifty real estate, incidentally, has come off quite rapidly in the last half an hour, 45 minutes of trade. I don't know if you attribute it to high beta nature of the Nifty real estate index. The market coming off a bit, the Nifty realty really coming off, about a couple of percentage points off, almost 2.5 percentage points off from the highs of the day. Private banks seem to be doing okay. So IndusInd, I think I saw ICICI Bank and Yes Bank as well, if I'm not wrong. The 3 stocks doing reasonably okay. So if you can talk about a cluster in the Nifty, which is just about holding out, it is the private banks. But the top gainer on the BSE mid cap is up only about 3%, and a clutch of small caps up and about, but that always tends to happen. So some on brokerage notes or otherwise have gone up. But by and large, a fairly quiet day of trade.
All right, Neeraj, thanks so much. That was just a quick market check. In case you missed the last 1 hour of programming on Bloomberg Quint, 4 senior Supreme Court judges on Friday held an unprecedented press conference where they alleged that the administration of the top court is not in order and that the Chief Justice of India, Deepak Mishra, has ignored their suggestions to take remedial steps on several matters. The 4 judges who addressed the press conference were Justice Chelameshwar, Ranjan Gogoi, M.B. Lokur, and Kurian Joseph. We tried to persuade the CJI to take steps but failed. That is quoting Justice Chelameshwar. Unless the institution of Supreme Court is preserved, democracy won't survive in this country. Strong words there coming in. Let's listen in to a few of those comments and then we'll get Menka Doshi in for more perspective.
Sometimes the administration of the Supreme Court is not in order. There are many things which are less than desirable which have happened in the last few months. Time and again, as senior members of the court, and goes without saying that we are the senior most judges of the country also by virtue of age and our office today, senior judges, we thought we owed a responsibility to the institution, to the nation. We tried to collectively persuade the Chief Justice that certain things are not in order, therefore he should take remedial measures. Unfortunately, our efforts failed. And my dear friends, we are all 4 of us are convinced that unless this institution is preserved and it maintains its equanimity, the democracy will not survive in this country or any country. So all of our efforts failed. Even this morning on a particular issue, 4 of us went and met the Honorable the Chief Justice of India with a specific request, which we could not unfortunately convince him that we were right and the appropriate decision is to be taken. We couldn't convince him. Therefore, we were left with no choice except to communicate it to the nation that please take care of the institution and take care of the nation, because we have heard a lot of wise men talking in this country earlier. I don't want another 20 years later some very wise man in this country blame that Chelameshwar, Ranjan Gogoi, Madan Lokur and Kurian Joseph sold their souls They didn't take care of this institution. They didn't take care of the interests of this nation. We don't want it to be sicked. So we place it before the people of this country.
Strong words from Justice Chalameshwar. After those pronouncements came copies of the letter that the 4 judges wrote to the Supreme Court Chief Justice. Arpan Chaturvedi, who was at the press conference, joins us on the phone line. Arpan, what else can you fill us in with?
That's right, Harsha. So as we have already reported, the 4 senior most judges are clearly coming out in the open finally and saying that they're not happy the way the Supreme Court administrative duties are being assigned or is functioning. From the letter, I think the key part from the letter that relates are the 3 lines where the judges have said that there have been instances when particularly important cases have been selectively assigned to certain benches. And remember now, no specific case has been named as far as the letter is concerned. In the morning, of course, during the press conference, one of the judges said that Judge Loya's case was a tipping point where right now there is a PIL pending which seeks independent investigation into that case. So that was accepted. Now remember, this whole issue of which bench will hear has been a long-going one in the last, and especially dominated the headlines as far as the Supreme Court news was concerned in the last 2-3 months. Remember the CJAR case where we saw a difference of opinion as far as which bench will hear the matter between the Chief Justice of India and the second senior most judge, Justice Chalameshwar. However, nobody or none of the judges has specifically mentioned that case for the reason of it. But then again, there has been the pattern establishes that there has been a difference of opinion as far as the assignment of cases in the Supreme Court is concerned. And today we have seen that Justice Chalameshwar is now joined by 3 senior most judges. Now remember, these 5 judges, the importance of 4 addressing the press conference is that they are all 5 senior most judges who are also part of the collegium which makes up for the appointment and which carries out the functioning of the appointments of judges to the Supreme Court, the higher judiciary. So these 4 are the most senior and most important judges of the Supreme Court, apart from, of course, including the Chief Justice of India. And that is why this news has taken such importance right now.
Arpan, thanks so much. We'll let you get back to what will probably be a hectic day of developments. Menka Doshi is here with us. Menka, you spoke to a bunch of legal veterans. Apart from the fact that this is unprecedented, what comes out? Because I'm sure the Chief Justice will now be under pressure to either defend himself or put out a counter view.
Look, and I say these as editorial comments, and I'll distinguish from what Arpan was doing, which is reporting. I don't think the Supreme Court will remain the same ever. I think today's day is a watershed of sorts. I don't know if it's a good one or a bad one. We've had different guests come on and describe it differently. Arvind Dattar, a senior counsel of the Supreme Court, said that, this was not just unprecedented, but it was also worrying the way these events have taken place. And whilst everybody understands that these 4 judges would not have gone to the public unless their backs were up against the wall, the fact that they've chosen to take this to the public, the fact that things have gotten so bad and deteriorated so much at the Supreme Court, that judges have broken that one, sort of code they have of deep silence, is an issue of very, very serious concern. Indira Jaisingh, another senior lawyer who's practiced at the Supreme Court for decades now, said she in fact felt encouraged that this was a move towards transparency, that the nation should get a better view of what was going on in the Supreme Court when it comes to the matter of allocation of cases, etc. Prashant Bhushan joined us, and he has been, at the middle of some of these cases that have helped raise these questions about allocation of matters in the Supreme Court. And he said that this is going to have serious implications on the future of this present Chief Justice of India, Deepak Mishra. And when I pushed him to try and respond to that, he said, and he put out a very extreme point there, and I'm not sure everybody agrees with him, but he said that this might even lead to impeachment of sorts. So I don't know, that might be very, very extreme, but I think the point to make today is that the Supreme Court will never be the same again. When you have someone break a decades-old tradition and go public with concerns of this matter, you open up the court to one of 2 things. Either the remainder of the judges, and there are several very good judges in the Supreme Court, will come together, convince the Chief Justice of India, and find a way to bring back the unity that the Supreme Court of India has had. Or you will have all kinds of people wanting to take advantage of this weakness that is on display. And I think the second one is very, very worrying. So I don't know which way it will go. Arvind Dattar mentioned that, maybe the Chief Justice of India will now think that he needs to put his views out there. It seems to be a logical next step to this. But all this airing of dirty laundry in public never ever leads to good conclusions. We know that. We've followed this in the press for decades. It weakens institutions, at least at the first instance, rather than strengthens them. Maybe this will bring about a strengthening of the institution. The second point I'll make, and I'll make it very briefly so you can get back to the business at hand, which is that there are two issues that have been raised here, which the viewers need to know about. What these four judges are agitating about has to do with the allocation of cases, and the allegations are here, and I use the word allegations loosely, that the Chief Justice of India has been allocating cases to benches in a manner which is not ordinary. So while some cases should have gone to the second or third most senior benches, they've been suddenly allocated to judges who are neither the second nor the third most senior. In cases where the Chief Justice himself should not have even begun to hear the case, he has decided that he's going to hear it and then decide which bench will thereafter take it up. So that's the one critical criticism that's come in at this point. And the second has to do with the lack of finalization of the memorandum of procedure. The memorandum of procedure has to do with how judges will be appointed to the senior judiciary, which is the High Courts and the Supreme Court. This was to be determined by the Supreme Court in consultation with the Government of India after the Supreme Court struck down the National Judicial Appointments Commission, or the NJAC. This has not yet been finalized, and these four judges seem to be agitating. So that seems to be the core of their letter and the core of their concerns. That's at the heart of this matter. But the way these events will be perceived will either lead to the strengthening of this institution or the weakening, and in the near term it might just mean the weakening.
I just have one question to ask before we move forward. You know, in the whole NJAC versus collegium debate, one thought that the Supreme Court, in a sense, ganged together to some would argue, didn't want to push in any sort of new reform into it. The old boys wanted to stay together. But this shows a lot of division within their own ranks, isn't it?
So Justice Chelameshwar at that point as well had expressed his favor for the NJAC. I don't think the Supreme Court has necessarily been a gang of boys that agree or a gang of people that agree. There have been differences. Many judges have felt in the past that the collegium system has not succeeded in bringing the best talent to the fore in the Supreme Court, that it has not delivered everything that it ought to have. There are constitutional interpretations to this. But the fact is that so far the Supreme Court has spoken in one voice. Today we heard the Supreme Court speak in two voices. One of the four judges here, and I'm sure one will be of the remainder of the judges, if not the Chief Justice of India being the third voice. So yes, this I think plays into the hands of parliamentarians who questioned the way the Supreme Court was going about doing things and said there is no transparency, and who therefore used that to want to bring in an appointment of judges procedure that allowed for the executive to have a bigger hand in all of this, right? And I think the Supreme Court has just opened itself up now to further attacks from that front.
It's a divided house. We'll wait and watch. We'll get you more developments as and when they happen. But the word that's been used today is unprecedented. We've not seen anything of this sort from the Supreme Court, senior most judges in the Supreme Court. Let's listen to some of those leading lawyers that Menka has been speaking to after that historic press conference.
Not only unusual, it's unprecedented and also most unfortunate. I think that these four judges this must be just the last straw. Today's incident of not able to persuade the Chief Justice with regard to a particular bench must have been the last straw. So obviously, this has been brewing for quite some time. There seems to be enormous amount of discontent in the collegium. I think faced with complete frustration, they must have finally said that there is no option but to come to the press and say that, look, whatever we are saying to the Chief Justice is not being given credence to. So I think it's a very sad day. As a lawyer practicing for more than 30 years, it's a very sad thing to happen.
The point which they have brought out, that is history, tradition, as well as the independence of the judiciary and the administration, that is what we should really engage and find a way forward in the solution. We don't want this to escalate and grimmer. We want the institution to function in line with its legacy and constitutional values and the constitutional framework.
I think we, the people of India, have a right to know what is going on within the collegium, and they have taken this very bold step of making it publicly known what's going on. As they said, they've done it in the interest of the independence of the judiciary, the need to preserve the institution, and to maintain the healthy legacy of the court, which is one of protecting the citizens of the country.
All right, let's also get you some reactions from former Law Minister Ashwini Kumar and Supreme Court Advocate KTS Tulsi.
This is a sad day for our judicial system. It is a sad day for India's democracy. It is a sad day for everything that we have held dear. this press conference will strike at the root of institutional integrity of the higher judiciary. It has raised question marks about the credibility of the system as such, and has directly cast aspersions on the head of the Indian judiciary, namely the Chief Justice of India. I think the people of this country who have had the highest regard for the highest judiciary will now be forced to think aloud as to whether we have gone gravely wrong somewhere. And I think this calls for a very serious national debate. What will now be required to be done by the Chief Justice of India to restore the prestige and credibility of the judicial system is for him to decide.
Well, this is an unprecedented step. It's quite shocking. One never thought that the things will have to come to such a pass. But nevertheless, there must have been some compelling reasons for the senior-most judges to have adopted this course of action. I'm sure they exhausted all other possible remedies. And if they did, this is, one could see pain on their faces while they were speaking. And the whole matter is, with regard to judicial propriety, the question is of natural justice. जो आम आदमी के लिए, whatever is the law for the common man, it is applied much more rigorously so far as judges are concerned. Because the judge must always be above suspicion, like Caesar's wife. And the judge must not, the concerned person against whom there is an iota of suspicion, should not deal with it, the matter either administratively or judicially. So this is, if there was a matter before one bench, I personally believe that it should have been allowed to go ahead.
Those were some voices to the press conference, but we'll get you more details a little more. We'll delve deep into it later in the show. But coming up next, we're going to talk about TCS earnings. Digital deal wins helped the TCS numbers this quarter. All eyes now on Infosys. More on that on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines at the half hour. In an unprecedented press conference, 4 of the senior-most Supreme Court judges say the administration of the apex court is not in order.
The nervousness spills over to the markets. Indices pair gains after opening at record levels.
After TCS, all eyes on Infosys today. The country's second-largest software service provider may report a drop in profits due to seasonality.
ISRO adds another feather to its cap, successfully launches its 100th satellite from Sriharikota and Andhra Pradesh today. The press conference by the 4 senior-most judges of the Supreme Court, while it has been unprecedented, has also brought in a bit of nervousness in the markets. Pradeep Pandya is here to take us through some of those stocks that have been moving quite dramatically on what was otherwise a fairly good morning.
Yeah, definitely. So, the view was that probably 10,700 is kind of a hurdle. Every time Nifty wants to get there, there is some pressure starts building up. But interestingly, before coming into the studio, I was talking to some of the dealers, and I just wanted to try to check, what they were doing over the last hour or so. So, in fact, people have taken advantage of this decline, and some aggressive traders have taken long positions. Some shorts were also cut because looks like 10,600 to 10,700 is kind of a range that people are looking at right now. So, if it comes down, it's probably an opportunity to take profit. Though on the higher side, there could be some pressure that may once again build, because if you look at it between 10,000 at around 10,600 so far, there was a lot of activity from put writers, and this was now emerging as a strong support level. But what we have also seen that now when markets started to move close to 10,700, some call writing has also is also coming up, which means probably now there are more synthetic strategies which are being taken, which actually tells you that here on market could actually be in a range rather than a consistent up move. So some pressure at higher levels can be expected based on that. Now, I think traders are more worried about the banking sector, which is not really participating. Today, again, if you have seen, during this fall, it was banking that was kind of leading. And then some pressure came on mid cap and small cap as well, because traders got unnerved because of this development. So they were just following the trend. So net, you can say that market has not really panicked. Is now trying to recover. Traders have taken advantage of this, but we'll have to see whether the confidence stays when we reach closer to 10,700.
All right, Pradeep, thanks so much. That's the structure of the markets. It's been a slightly volatile afternoon. Let's move on to the economy. A meaningful capex recovery remains elusive, and any rebound over the next couple of years will be moderate at best. That was the key message coming out from an India ratings report that was released on Thursday. Priyanka Podar, analyst and author of that report, joins us for a conversation. Priyanka, thanks so much for coming in. The key message, Priyanka, seems to be that, this time around, given that the economy is going to recover entirely on its own steam, and by that I mean that there is going to be no fiscal stimulus or monetary stimulus to speak of, that a capex recovery would at best be moderate.
Right, thank you. So what we've done is we have looked at the top 200 asset-heavy corporates, which are both listed as well as unlisted, and we have done a through-the-cycle analysis, which is ranging from FY5 to FY17, and built in the next 3-year projections. In this report, what we've done is we've looked at both the top-down as well as a bottom-up kind of analysis, and we think, based on our analysis, that for the next 2 years, by and large, these corporates would only be spending on the maintenance capex. So over FY16-17, we have seen a slight pickup in the growth. So we think of around 4 to 5%. So we think clearly the capex cycle has kind of now bottomed out. And over FY18 to 20, because of primarily 3 factors, which is one is on the demand side. So if you look at the data, the exports from April to November has grown only about 6%, which is similar to what it was in the same period last year. On the second factor is, if you look at the capacity utilization across the corporate space, it is close to, on an overall basis, it is close to 65 to 70%, and we see a lot of global overcapacity still sitting on the books, and because of these factors and because of the weak credit matrices for these the weak or the stressed corporates. We think over the next 2 years, because demand is clearly not picking up, or we believe that it will be very moderated, we think that the capex cycle is unlikely to improve in a very meaningful way for the next 2 years, while we do think that beyond FY20 there could be some uptick in the capex cycle.
Priyanka, I know we all look at the aggregates, the aggregate of capacity utilization, the aggregate increase expected at, on capex, etc. But maybe this time around one shouldn't do that, because, for instance, even as your report shows, certain consumer-facing industries are at full capacity and are running over capacity. Similarly, when we speak to people in the capital goods industry, they talk about the fact that you're seeing some capex starting from the consumer-facing industry. Now, that will not move the aggregate needle, but that is still capex.
No, absolutely, as you rightly pointed out. So in this report, what we've done is we have bifurcated these corporates into 2 buckets. Now the first bucket is what we see is the 125 non-stress corporates, and 75, the next bucket is the 75 stress corporates, which could be across the sectors. Now among those 125 non-stress corporates, we think the leverage levels are clearly at a level of 3 to 4x, while interest cover is still strong at around 6 to 7x. So possibly as on date, obviously these corporates will are in a position to kind of spend, but clearly the risk factor, or clearly why we think that next 2 years is not likely while these corporates will also spend, is because of we are not seeing any significant uptick in the demand. Whereas for the stress corporates who are currently running at a capacity utilization of say 40%, while the non-stressed ones are at a capacity utilization of 90-95%, because of the presence of these stress assets in the system, we think overall there will be highly likely that some of these would be kind of acquired by the non-stressed ones, and still there would be a lot of idle capacity sitting here. So we don't think that these even the corporates who are in a much better shape is kind of going to spend in a hurry.
Priyanka, just interrupting this conversation briefly to mention that ANI, Harsha, is reporting that the Chief Justice of India, Deepak Mishra, will address the press at 2 p.m. And the Attorney General is also likely to accompany him. Just flagging that off. Priyanka, just coming back to that. So this whole stress versus, companies which have balance sheet strength right now. Are you convinced from your analysis that there are enough companies, large companies, which have execution capability, which will be able to take up this gap left by the stress companies? Because, that is the other thing that we hear from people on the ground, that who are the guys who are going to come and do the execution even if capex were to pick up? Any sense of, from your analysis that comes up on that?
Right. So as I mentioned earlier, out of these 125 corporates, we have seen many of them, doing a lot, heavy capex over the last, 3 to 4 years. But clearly, until unless we see some demand uptake, or we see some improvement, in a capacity utilization, which kind of reaches on an overall basis, 80-85%, we don't see even the large ones going in for a very large, big scale greenfield capex, over the next 2 years. While obviously there would be some brownfield capex here and there, but any very meaningful or significant capex is not expected. Clearly, among these 125 corporates, we see the sectors like you can look at auto, or say for an oil and gas, where we think there could be some meaningful capex. However, other sectors who are pretty stressed at the moment with a very significant leverage levels. For sectors such as metal and mining, you have power or you have infra. We don't see many meaningful capex happening in the next 2 years.
All right, Priyanka, thanks so much for stopping by for that conversation, keeping it a little short today. Lots of other developments taking place, but thanks for your analysis. And, that's the balance sheet stress and the impact it has on the economy. Speaking of the economy, quickly flagging off 2 data points that come out later today. That's the CPI and the IIP numbers. Consumer price inflation is expected to not skyrocket, but move up to 5.1%. That's the expectation on December CPI. That would be the highest since about August of 2016. You also have the IIP numbers coming in today, and that is expected to come in at 4.4% for the month of November. That is.
Okay, let's move on now and talk about TCS and the increased focus on cloud computing, big data and digital services helped TCS deliver a seasonally weak quarter. Third quarter profit rose about 1.3% to 6,531 crore, in line with Bloomberg consensus estimates. Agam is standing by with some of the key takeaways from the earnings that TCS declared. The stock is marginally down today in trade. Agam.
Sure, Harsha, the concerns as far as TCS goes is on the banking and financial sector, which has seen a degrowth of as much as 1.5% on a constant currency basis. And the management has suggested that they are in wait and watch mode when it comes to this particular vertical specifically, and that growth is patchy. Of course, we've seen subdued earnings, and we've also seen TCS run up to a certain extent ahead of the numbers. So this partially is profit taking and partially it is because of the weakness that we've seen in some of its larger verticals.
All right, Agam, thanks for that. Let's also listen into my colleague Sajid spoke to Rajesh Gopinathan at the earnings meet last evening to understand just how far away the turnaround in the BFI segment is and what will be driving TCS's numbers here on. Listen in.
In Q3, we saw the retail segment coming up well, and you also mentioned about it as part of your presentation. But what about the BFSI segment, or rather the banking and financial services segment? We saw one of your competitors, Accenture, spoke about how banking and financial services is expected to go up going into 2018. What is your view on it?
We are also seeing strong uptick in retail first. As we said, we saw the rebound. And we have registered 6.4% growth in retail this quarter. And looking forward, we think next year it's well on our way to register a double-digit growth for the year. So we should be seeing increasingly strength in digital, especially on a year-on-year basis. Banking continues to be an area where we are on a wait-and-watch mode. I would still think that we are couple of periods away from seeing a meaningful recovery. It is patchy. There are parts of it, as we said, part of the European growth is driven by banking. And if you look at our deal wins, there is strong additions from the banking and banking side also, BFSI side also. If you specifically look at insurance, we are very, very optimistic of a stronger turnaround or an earlier turnaround in insurance, driven in part by our platform strengths also. The more core banking part of it, or rather the more retail banking part of it, is something that we think probably middle of the year would be a good period for us to target and look at.
Your company grew at 1.3% quarter on quarter in terms of dollar revenues in Q3. But if you look at the full year growth, will you be able to cross the NASSCOM guidance of 8 to 9%? Because if that is the case, then we have to see a higher volume growth coming in Q4 to meet or break or breach the NASSCOM guidance.
While NASSCOM is an aggregation of very large companies or across a very large spectrum of companies, there's a large dispersion in the business models and business strategies of companies. So I think this obsession with benchmarking to NASSCOM is no longer something that does justice to the industry. So I wouldn't like to comment about it. And I think we need to move on from that. A few years back, maybe 5 years back, it made sense. But now it's time that we gave up that as a benchmark.
Your margins are pretty much in line at 25.2% as per street expectation. But if you look at the consolidated margin for the full year and including the Q4, you will end the year with the margins of below 25% for the first time. And you have a target of achieving 26 to 28%. So what are the levers that you see to ensure that you move towards the 26 to 28% margins?
If you look at our year-on-year performance on margins, last quarter of the same year we were at 26%, and today we are at 25.2%. And of the 80 basis points that we have lost there, more than 70 basis points has come from currency. So if you were to adjust for currency on a year-on-year basis, we are still in the 26 range. So currency has moved in very, very unexpected areas. Our business model depends on a systematic movement or a logical movement on the currency side. But I think the comment is more in terms of the strength of the business model. Currency typically tends to be lumpy and unpredictable. But overall, the business model and its ability to maintain its profitability continues to be strong. and I would still remain optimistic on that.
Digital has grown very well for you. You have grown at 39.6% on an annualized basis. And even in Q3, the total contribution of digital has gone up to 22% from 20%, less than 20% in Q2. But how are the margins looking in this segment? Are you able to get the same margins or higher margins, which are about 25% as we go and as your pie of digital increases?
So as I explained in my opening remarks, digital for us is becoming a much more complex area. So the real power is not just in digital, which is a very technology-oriented way of looking at it. The real power comes from our ability to take digital, marry that with domain knowledge and with contextual knowledge of customers, which is what changes the whole deal structure and converts it into a much larger one, and which is very different and very unique. There aren't many companies that can do it. Pure play technology providers cannot do that kind of deals. And when you look at these kind of complex engagements of size and volume, margin profiles are very different. So we have always said that as digital grows at scale, its margin profile will continue to improve. And we are still continuing to be on that path. And our ability to stitch these deals together, stitch larger engagements, which fundamentally leverage digital, is going to be a big differentiator for us and a clear outperformance driver.
That's TCS for you, but we're also watching out for earnings from the other company, Infosys. Agam is standing by to tell us what the street is anticipating on Infosys. The stock is marginally up, and all eyes are on the new CEO, Salil Parekh, who's going to take over, or who's recently taken over. Agam, over to you.
Well, not unlike TCS, it's going to be a quiet quarter for Infosys considering seasonality and furloughs. So in terms of expectations, we're expecting just about a 1.6% growth in terms of revenue sequentially when it comes to in rupee terms. Margins expected to remain largely flat at around 24%, and profits expected to decline marginally at little less than 3,600 crores. Its dollar revenues as well are expected to move up by less than 1%. Reasons, well, seasonality and of course continued weakness or subdued demand when it comes to its key verticals such as BFS and manufacturing. On the other hand, we could expect an uptick when it comes to its retail vertical. That said, the most important thing for as far as this quarter will be what Salil Parekh, the new MD and CEO, has to say about the plans for Infosys as well as the strategy. And we'll also be watching out for more developments with respect to the top management and if there is any more change, if at all. That said, we're also keeping an eye on the outlook with respect to client budgets as we move into 2018. But on the whole, we're expecting a quiet quarter when it comes to Infosys.
All right, thanks so much for that, Agam. The management comes up at about 4:15 today. We will try and cut to that press conference live, so watch out for that. Last order of business, global crude oil prices have been on the rise. You've seen WTI crude taking out the $70 a barrel mark. The question is whether Indian consumers have taken the full impact and the full hit of the higher crude oil prices. Well, it turns out they haven't. Somit Sarkar is standing by with the analysis of what's been moving crude and how Indian consumers have fared, Somit, in the face of that price rise.
So if you see in this chart, the pink line is the crude, the blue line is petrol prices, and the orange line is the diesel prices. So you can clearly see how crude has moved up. It has moved up from $47 per barrel to around $69 per barrel. And in the same period, petrol has moved from around 67 to 74 and 75, and diesel from 57 to around 63. So on an average in the last 6 months, the diesel prices have increased by 11%, petrol prices by 9%, whereas in a deregulated and a daily pricing market, Brent crude has moved from around 45%. So let's see what has been the impact of this on the oil marketing companies and what is the reason behind this. Now in this last 6 months, the rupee has appreciated. Now rupee has appreciated by close to 1.3%, which has worked in favor of the oil marketing companies, because they need to, because if the rupee appreciates, they need to spend less to purchase every barrel of crude that they need. Secondly, in this period, government has lowered its income. Now, they have lowered the excise duty on every litre of petrol and diesel by 2 rupees to provide some buffer for the oil marketing companies as the crude prices were rising. Now, the oil marketing companies, that is HPCL, BPCL and IOCL, have also cut down on their income. Now, in July, they were earning around 3.6 and 3.3 rupees as gross marketing margins on every litre of petrol and diesel that they were selling. Now, this came down to around 1 rupee per litre on both because they had because of the rising crude prices, they did not pass on the hike to the customers, and they took a hit on the marketing margins. Also, it was not only the marketing margin, it was the demand of petrol and diesel in 2017. Now, the petrol and diesel consumption in India in 2015 and 2016 rose by around 7% in every year. But in the calendar year 2017, it rose by only 4%. So from 7%, the petrol and diesel consumption in India came down to 4%. So this was also one of the reasons why the prices were not completely hiked to the customers.
Soumya, thank you for that. Out of time on the show. Thank you so much for joining us on Lunch today.